Our marketing analyst this week is Johannes from Central Valley Ag. We talked with Wade Tuesday morning at CVA's East Hub in Oakland. We covered ethanol margins, troubles in Europe, and the world's soybean supply. To start, we asked about the selling conditions before the June 29th acreage and stocks report. With the USDA seeing favorable growing conditions in corn, we asked how tight the selling window would be before more volatility entered the market.
Well, right here in northeastern Nebraska, we've gotten some beneficial rains, but it's a little bit drier east of us. There's chances later on this week, but if they get that beneficial rain, we could maybe take a little bit more out of the market, but if they don't, we're going to be jumping higher here pretty quick. So it's all a matter of whether the rain hits the right areas or not, which way we go from here.
And obviously the crop acreage report could change that come the end of June, but when you look at new crop and thinking about contracting out and finishing that, are you looking towards a December contract or even further than that?
Well, it depends on their operation, but if they can store it on farm, maybe you look at the March or the May, there's actually pretty decent carry this far out, for hedging the March futures and then waiting on basis. And, you're hedging at a higher level and it feels a little bit better. So some people are able to make that sale versus the tough harvest delivery that's with a wider basis.
Long term, what are you looking at in corn in terms of price? Are you bearish going forward?
We've been range bound for the last several months, Jeff, and I think there's potential that we could move lower, but it's going to depend on weather. It depends on the size of this crop. And then you add in all the outside stuff that's also going to weigh in. So I think we're going to have opportunities, but I think we need to separate out what we've come from versus what we're going to go into.
Before we get into beans, what are you looking for in that acreage report? What do you expect to see?
Well, I think we need to remember that just because they had X number of acres in March doesn't mean they can't find more acres for both. And I think we'll stay steady in corn and find more bean acres.
You don't think there'll be a switch, or do you think there'll be a switch?
There was some switch, but I think there's more acres out there.
The ethanol margins we're seeing in corn right now they're tight. What would have to happen for those to increase?
Well, we're going to need to have, a rally in crude oil, which a lot of people don't want to see, but that would help their margins, and then just an increase in the overall economy, just the overall demand for gasoline.
Let's move to soybeans, and this seems like a bullish place to be. Exports are good. South America has weather concerns and perhaps a shortage as well. Global supplies are tight. What are the reasons not to be bullish in soybeans?
Well, I think, we need to look at it as an opportunity to sell here in the next month. I think we will find more acres when we get to the end of June. And then also, we need to remember that with these higher levels, everyone around the world is going to do whatever they can to raise a record crop. And that goes for South America next winter. So by the time they start harvesting in January, that's going to start playing into global supply and demand.
You said an opportunity to sell over the next month. What are you looking to sell? 2012, 2013, old crop, all of it?
A little of everything, actually. I think the next month is going to be an opportunity for old crop beans, new crop, and to get started on 2013. Don't go too crazy out there, but 10-20% I think is a good place to be making a sale. What
is the thought process behind 2013? What's the comfort level you want to be at?
I think if you stop at about that 20% level this far out, I think that's good risk management.
Let's take a look at exports. And soybeans, as we've said, they're doing really well. They're meeting USDA expectations, but corn's lagging behind. What's the dichotomy there?
Well, the export market is very strong just due to China, and we always hear on the corn side that China's coming in and buying U.S. corn, which is great, but you have to look at percent of the crop. 1/3 of our soybean crop goes to China, just one country. And then on the corn side, well, 40% of all demand is ethanol, and then just right behind that's feed, and then all of exports to all countries combined is only about 15 to 18%. So that's the reason why it hasn't kicked in as much as it has for soybeans.
We're talking on Tuesday morning, and this thing seems to be changing by the day, but troubles in Europe continue to lag over the market as a whole. What can you do, or what can farmers do to plan ahead and manage the risk that could come from Greece defecting from the euro or anything else that might come out of that region?
Well, that's a great question, Jeff. I think we need to understand our numbers. We need to be diligent knowing what it takes for each and every operation, to know what their break even is. At the current levels today, is that a profitable sale for you or not? And then look at it in terms of, okay, if this thing does head south, what am I comfortable risking on that? Is that 1/3 of my operation, or is it half my operation? Everybody's gonna be a little bit different on that. But I think everybody needs to look at it and be aware that somewhere down the road, it's gonna change.